Okay. So I'm going to share my screen straight away. We're going to go straight into the charts. There are lots of things that I want to talk about today. So I suggested in the group chat, did you say we should do dollar currency XXS? In the chat box, please. Perfect. Okay, so let's go to the dollar currency. Just like I always do it, I always like to have a look at the dollar currency and see what's going on in the dollar currency before I look at anything else. Today, I'm gonna go full screen mode. Give me a 2 in the chat box if you can see my screen, please. Fantastic. So before I start this, there is one nugget that I want to give everybody on this call before we start. I don't know, I've said it so many times, but some of us do not know already. If you know it, that is fine. But if you don't know it, it is something I want you to write down. It is something very important that I want you to write down. I wish people are still not jumping in too late. Let's try and take the sound off. I don't know how to do it, but yeah. If everybody is ready, then I'm going to say the sentence. Price will always move towards liquidity. Price will always move towards liquidity. So if you're building your bias and your bias is against liquidity, your bias is wrong. Did everybody hear that? Give me a 2 if that was clear. If not, give me a 1, sorry, if that was clear. Again, thank you. Okay, so somebody asked a question. What if IC is at the top and bottom? I don't care about IC. Institutional candlesticks do not, institutional traders do not care about ICs. They don't care about gaps. They don't care about anything. Price will always move towards liquidity. Okay, what if liquidity is at the top and is at the bottom? All right, that is what we're going to explain today. I'm very new, so what's the meaning of bias? Bias means direction. Are you looking to go to the upside, which is a buy, or are you looking to go to the sell side, which is a sell? So that's what it means by bias. So if you hear me saying bias, all I'm trying to say is, are you choosing to go upside or are you choosing to go downside? Are you choosing to buy or are you choosing to sell? That's all it means. Take clear note of this. Price will always move towards liquidity. It does not care where the money is exactly. Thank you, Mark. It does not care where institutional candlesticks are sitting. It does not care where imbalances are sitting until liquidity has been taken. And I'm going to prove that to you with the DXY. And if I finish the DXY, I'm going to prove that to you again with all the rest of the pairs that we're going to look at. I'm going to take my time and explain things to you very, very clearly. I believe that after this call, lots of people are going to start seeing different things they've never seen on charts before. And that's what I'm going to try and do today. So without talking too much after that sentence, I want to show you why I said price will always go towards liquidity. Can somebody tell me the trend of DXY looking at the chart right now on the monthly time frame? What's happening to DXY? Somebody says bullish, somebody says down, consolidation. What's the trend of DXY on the monthly? I need more people talking. Bearish, accumulation, bullish. All right, so for those saying bullish, I want one person to unmute themselves and tell me why it is bullish. And for those saying bearish, I want one person to unmute his or herself and tell me why it is bearish.
Hi, Francis. I said it was bullish.
Yeah, and what's your reason?
Because it went down, but then it broke structure at the bottom.
Yeah.
And because of that break of structure, I would say now it's on a move up.
Okay, thank you very much. Anybody else thinking it's bearish, please unmute yourself and tell us why.
I would say the last important swing high, which was it's at about 120. It hasn't broken it to go for me to say it's bullish. Um, yeah, that's the reason I say
Thank
it's
you very
bearish.
much. Thank you very much. So if I'm looking at the monthly chart right now on the dollar currency, I would say it's bearish. I'm not trying to say anybody else thinking is bullish. It's wrong, but I want you to take note of the major zones, major points of interest on this chart right now. If you look from here, price came down here. So this low created this high, and this high has created this low. So what are we creating? In the chat box, if you know it, feel free to put it in. What are we creating? Lower highs and lower lows. On the major trend, we are creating lower highs and lower lows. And I understand exactly the reason why people were saying we're bullish on a DXY. And that is because there is a break of market structure in this area. There was a break of market structure here. There was a break of market structure here. There was a break of market structure here. However, if I should pull my fib from here to there, and this retracement in here that broke market structure is not up to 50%, I don't call it a retracement. I call it a correction. And it's not just Francis calling it a correction. Every person who understands trading and understand the Forex market, understand the market structure, knows that if there is a retracement happening in the market and the retracement is less than 50%, if you pull your fib from the swing high to the swing low, it means that it is a correction. Are we taking some notes here? Give me a 2 if you're taking some notes, please. Thank you. So if you pull your fib and you get in a retracement that is less than 50% of your fib, it is a correction. The only time you would be able to say that price has done a retracement is when price has moved past the 50% or touched the 50%. So that's the difference between a correction in the Forex market and then a retracement. So for all these breaker market structures that I see around this area, all these structures right here, I see as corrections in the market, getting ready to create something different. So until I see price go above the 50%, which is around here, any retracement in here, I think is a retracement, and this can potentially give us or create a new lower low. I hope that is clear. Give me a 1 in the chat box if that is clear. I want everybody on this call to really understand this. That's the reason why I'm going to be asking too many questions, asking too many ones, asking too many twos. For every step, I want to go with you. Now, with what we have understood, why is it that price is moving towards the downside and not the upside? Why is it that price is moving towards the downside and not the upside? And this is where the understanding of market cycle comes. The understanding of what? Market cycle. If I look at this chart as Francis, what do I see? I see this area as a box. I see this area as another box. I see this area as another box. And all these boxes are going to start making sense very soon. See this area as a box. I see this area as a box. I see this area as a box. And you'd be wondering, Francis, why are you doing too many boxes? See this area as a box. So with these boxes, I can understand where the market cycle has gotten to. Right? So what does what box explains? If I know that my first box is on the ground, is on the lower side of my chart, I understand that that is what? An accumulation. So everything that we have learned, I am going to put into context. So I know this is an accumulation. If I see any box in the middle away from accumulation, that becomes my reaccumulation. And if I see a box at the very top, that becomes what? In the chat box, tell me. Distribution, thank you very much. So this is a cycle of the market. This is how market moves. We have an accumulation, a reaccumulation, and distribution. And after distribution, we get to have what we call redistribution, which is inside here. Before we come back to what? Accumulation, and that is the cycle of the market. So if I'm looking at a higher time frame and I can deduce this, then I know exactly why price is moving to the downside. Because I know we created an accumulation, a reaccumulation, a distribution, the cycle to the upside completed. Now we need to reverse the cycle back to the downside. And that is where we get to have the redistribution, accumulation before price begin to work back up again. And as price is walking back up, it will be walking back up to clear all liquidity before it decides to drop again. Now let's have a look why price had to redistribute in that area. If I look at the chart this way, this is a clear high. This is a clear high. And for every clear high, there is liquidity sitting above there. Let me put it this way. For every clear resistance in your upside trend, there is liquidity sitting up there. I've always been saying that it should be a double top or a double bottom, but I want to make you understand that for every I don't know how to say, every roof that you have in an upside movement, there is liquidity. That is the reason why it's a roof. Think about it this way. If you have money and you want to protect your money, what do you do? Any suggestions in the chat box? If you have money, if you have a big money and you really want to protect that money, what do? You hide it under your bed. Some very good. Some people would say, I'll put in my safe. Exactly how the banks works. If they invest a huge amount of money in the Forex market, they want to protect that position until they're ready to take their money out. Stop profit, stop loss. I want to protect the money in such a way that nobody can get to it until I am ready to get to that money. That is how I want you to think about this. I'm giving you the context as to how things happen in the market, and I'm giving you the actual terminologies that goes with it. So now knowing that in this area, there is a clear high, there is a clear high, there is a clear high, until price has cleared every single high, price is not going to come down. On the upside, I'm talking about. Until price has cleared every single high, it is not going to drop. I'm trying to be very surgical on this. And that is exactly what happened. So we had liquidity sitting here, liquidity sitting there, liquidity sitting here, liquidity sitting there. And see what happened. We accumulated, and now let's put the labels on. This becomes our sell climax, SC. This becomes our ST. I'm just going to label the main stuff that you really want to know. The spring. And what happens after the spring? A break of market structure here, and price comes down to snipe off inside an institutional candlestick. And the bullish move begins. And this is a monthly time frame we're talking about. Now let's focus our attention inside this area. The bullish move began after we broke the market structure of the spring, came back to retest the spring, and boom, we went. Our first consolidation area becomes our reaccumulation, just like I said. Now let's pay more attention into this area and see what happened. This becomes our sell climax, sorry, our buy climax. This becomes our sell climax. This becomes our ST. This becomes our spring. Sorry, this becomes our ST. This becomes our AR. And this becomes our spring. Again, look at the way spring went below all the liquidity that was available. I said to you, I'm proving to you, price will always go to where liquidity is. So look at this, guys. There was liquidity all the way down here. Liquidity all the way down here. Until price had cleared everything. Look on the left-hand side. Look on the left-hand side. Until price had cleared every single thing on the left-hand side, it realized that I have nothing to take. However, there are lots of meat on the upside. Now I need to target the upside. And look, straight away, it started walking up and clearing every single one of them. If you see the market in this way, then you'll always understand that where is the money sitting? If I get to know where the money is sitting, then I'll understand where the banks are ready to shift the market to. So if I type in a group and sometimes I say, I see price reaching this level, I know exactly where the liquidity is and I know why they're moving the price there. So I know the level that they are going to end. It's not magic. It's literally every single thing I'm talking about on here. So from now, we have the reaccumulation. Now we see the spring again. The spring comes down to clear all the liquidity. And once again, we see price walking up, clearing that liquidity, clearing that liquidity, clearing that liquidity. And what happens? We start to redistribute. Immediately we got to the last liquidity. See what price started doing? Redistribution. Sorry, distribution. So we have our buy climax. We have what? Our secondary test. We have our UTARD. Somebody will be asking, Francis, you said UTARD, but why have you written a UT? I want everybody here to pay attention and understand that in distribution, we have two different kinds of distribution. We have a distribution schematic 1 and we have a distribution schematic 2. I have explained fully on our last Zoom that we had on distribution. I did a distribution schematic 1, where there has to be a UTARD formation before price drop. In distribution schematic 2, there is always a UT being the last point of interest. So the UT forms and immediately price drop. So if you look at a distribution that do not have a UTARD, that does not necessarily mean it's not a distribution. It is a second distribution schematic. That creates only UT, and from the upthrust, price had to drop. How would I know that from the upthrust, price is going to drop? There has to be a break of market structure showing me that price is dropping from the upthrust, and there you go. Where was the money sitting? There. Are we convinced that now price will always move towards where money is sitting? Give me a 3 in the chat box if you're convinced. If not, I'll keep going. It is funny, but trust me, it is happening every single day in front of us. We can see it, but we don't understand it. We can see it, but the problem is we don't understand it. Again, I'm showing you why they were coming down. So for every clear area, look at the way price began, walking it way down, clear that liquidity, clear this one, clear this one, clear this one, clear that one. And immediately everything got cleared, including this area got cleared, because they understand that people are not so stupid. As they were doing the schematic, people had developed the understanding of coming inside market. So they're going to join this trade. There was more liquidity at the top. How come the banks didn't go for it? Okay, Lloyd, do you know the reason why I put this line here on the top side? Double top. And what does a double top means? Lots of liquidity, thank you. So if I know that lots of liquidity is up there and I clear everything on the upside, how will I know that DXY has the capability of coming up again? It means that the dollar currency can never rise again. And guys, the market is engineered to suit their benefit. And today I'm trying to explain to you exactly what these people are doing to the charts. It's engineered, it has been created. It is I don't know how to place it, a computerized system. They don't just wake up today and say to themselves, we're going to move price there. They don't do that. It has been pre-planned. So they know from today, we're going to move the money there. Tomorrow, we're going to move that money there. Absolutely. We create more liquidity. Double tops are created on purpose. So after they created this distribution here, they intentionally finished the distribution off this high to let you know that the next time that we create accumulation, redistribution in this area, reaccumulation in this area, the next distribution is going to clear this area. Today, I am telling you this. I don't know when that is going to happen. We're looking at monthly time frame. But if you will still be a trader, mark my words, the dollar currency is going to go past 128. You're probably gonna doubt me and feel like, okay, you're joking. It's never gonna happen. But write it down today. When it hits that area, come back and tell me, Francis, how did you know it? And I'll refer you back to this video. It happens on all time frames. That is the reason why we say price is fractal. Is it best to look for, what is alkyl, please, at a higher time frame? Liquidity at a higher time frame, lower time frame. Well, this is a top-down analysis, and I'm taking my time, guys. We haven't gotten to anywhere yet. We said we want to understand how Francis do a top-down analysis, and today I want to explain to you exactly what I look at and how I manage to think before I decide to take a trade on any USD cross. We haven't started even yet. This is just the basics of it. And we're on DXY. Right? So now I know that if I have an accumulation in this area, there is no way that this area is going to create a distribution. However, I know that no matter what the schematic is going to be here, we are going to create a reaccumulation. Do we agree, guys? Give me a 1 in the chat box if you agree. The rest of the people are not saying the ones. Where are they? If you're struggling to understand anything, please let me know. I'm on this call for you. I didn't get that. Okay, so what I'm saying is that if price has created an accumulation schematic in this area, I know 100% that this area is never going to be a distribution. I'm going to have a reaccumulation. And I'm asking, do you agree? Good. So if we don't reaccumulate, we cannot distribute. That's all I'm trying to say. If we do not reaccumulate, we cannot distribute. So from accumulation, we reaccumulate, then we go to distribution. And for clear reason, if I look at this chart on the monthly time frame, I'm drawing up the chart to post in my group for reference. Fab. If I look at this chart right here, I know that this is the buy climax. I know that this area becomes my what? Sell climax. I know that this area becomes my automatic reaction. I know that this area becomes my ST. And I know that this is my spring. Right? And if this be my spring, worst case scenario, dollar currency is just coming here. Worst case scenario. Now, if you're looking at this right now, Is it starting to make sense? So dollar currency is not dropping by mistake. So for everybody that is wondering, oh, there is an election coming up, and that's the reason why dollar currency is doing too much manipulation, is doing what is doing what is doing what. Everything is already pre-planned. And they knew exactly that this time is going to meet the election. What's AR? AR means automatic reaction. Every time you hit a strong point of interest, price will automatically reject off. And that rejection becomes the automatic reaction in the Y-cup schematic. And the reason why I know the dollar currency worst case scenario is coming to that institutional candlestick is because if I look around this area, look at the wicks, 1, 2, 3 wicks. Now where dollar currency is going to blow through. If it blows through this, dollar currency is going to do what? It's just going to drop, clear this liquidity, clear this liquidity, clear this liquidity straight away, not two ways. And that is if maybe America is ready to just lose everything. That is when that is going to happen. Once we break this liquidity, we break this area, dollar is just going to keep dropping. And I can assure you that the spring doesn't align to a rally based rally. Okay, why do you think the spring does not align to a rally based rally? Feel free to unmute yourself. Let's have a little chat, and I'll show you why I think it really aligns to a rally based rally. Okay, no worries. If I look in this area, this candle right here is more than 50%, has a body that is more than 50%. However, if I look at this candle here, is a candlestick that is less than 50%. Right? And I said one thing in the group chat yesterday. Why does price react off an imbalance and not an institutional candlestick? If I should mark up a line from here, this wick from here, and I should extend it from there, did you see that clear reaction that occurred? Do you know what this candlestick is? If you know it, in the chat box, please. That's it. It becomes a mitigation candle. It's not there as a mistake. And look at the way the mitigation candle is lining up exactly inside the imbalance. If I see this reaction, I already know that mitigation candle is sitting there. You see it as a wick on the monthly time frame, but if we go on a smaller time frame, you're going to see that it was an institutional candlestick that has been violated. So if you're on this call and you're wondering what does mitigation candle means, mitigation candlestick is really an institutional candlestick that has been violated. I hope that is clear. Please give me a one in the chat box if everything so far is clear. Fabulous. So now on the monthly time frame, we already understand where we are in the market and where we'll be looking towards. So usually I'll do my chart and I'll do something like this. So I know price is just going to react off somewhat here and then we will be going up. That is the buyers on the monthly time frame, not two ways. Not two ways. If I break below this area, all I'm going to do is I'm going to move this line right here to the edge of this, wait for that break, wait for the retest, and dollar currency is going to keep selling. That's all. That's all. That's all. And knowing this, you can really build your bias. If price decide to go to the upside or price decide to go to the downside, you don't care. You can build your bias every way. So if I should place my bias here thinking that price is really going to do what I want, but you don't do it, let it break it. Immediately it breaks, I'm going to wait for price to react of this wick, and then I'm going to always look to go down with the market. Now, knowing the monthly direction on dollar currency, let's focus on the weekly. What's going on the weekly? On the weekly, again, look at the way price created highs, 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 highs. And what did price do? Went up, started to clear all the liquidities. And where did price stop? What's the name of this thing again? Thank you. So guys, we have less than a minute on this call. I'm going to ask everybody to drop off this call right now and jump back on in less than probably 10 seconds. And then we can move on from here.